Hey guys, good afternoon. So we fell a lot further than I thought was going to happen. A 362 point move off of 5,300. And that was much, much lower than I thought. But we went from daily one to daily one. So, it wasn't algorithmic coast to coast. It was just a very wide range. And they took every drop of it. The VIX went up 20 points today from tip to toe, 1999. And we are into tails also in the SPX. So just a huge, huge range. I was expecting the quarterly three to hold, and it did for a while. I mean, no doubt about it. It sat on quarterly three for a long time, and then it finally broke it. And when it broke it, it took off, and I mean, it raced to the downside. Um, and it briefly held at my monthly levels. I had a tail here on the 30-day tail, 30-day, 1.5 times the 30-day range at the lower monthly one. So that was a very strong level of confluence. So I thought that would might hold it at this prior open. The bulls were sitting on that open, but we had the lower 2 times the 30-day range, and I thought, that's going to hold it, right? Certainly, they're going to hold this monthly one, right, to stay long above that lower monthly one. Because if you're long the market, let me give you your bell curve 101. You want to be long at this location. It is a prime real estate spot right here if you're a bull. If you think that we're bullish overall and the market has a chance to continue higher, this 1.5, the monthly range at a 1.5 open and close on that 30-day range at the monthly one is prime real estate. That is definitely a sweet spot. So I sent that out as a note, letting you know that it was a sweet spot. It went just a little bit under it, but where it went was to our R wall on the tick. Let me move this so you can see it. I mean, 49, 42, 75. I mean, right there, and it bounced. So they took it from the daily one to the daily one. Our levels are great. It's just, it with this wider, higher volatility, it went much further than I thought it was. So I have a lot of questions about these hedges. I'm not that familiar, and neither are you. Nobody really is. We don't get to see the long put on the JHEQX get broken every day, right? Very rarely. I mean, it's really rare to see the market trade below that long put. And it usually doesn't stay under it very long. They send it back up. So when they take a hedge like this, they hedged it Sunday night at the 52.95. That's exactly where it gapped to. They gapped it on the open on that 52.90 SPX put line and sent it straight down. We came back and almost tested it the day after. And I thought today for sure we were going to get back up there and test it. And they held it off. And that was my question. It's like, do they allow it to go back in? Do they take the hedge off, at break even and allow the market to go back long like it wanted to do? Or are they hedged and it's like a monthly hedge? It's not like a day trading zero DTE hedge. So it's a monthly option. They took the end of the month option, and so that it's an SPX hedge. So that would be the OPEX expiration. So the end of the OPEX, which is the third Friday of the month, right? That's the 18th. So we have one, two, three, four, five, six, seven, 8 more trading days to get there. And so that is the contract that they're hedging. And so that helps clarify it, right? If it gets back inside the 52.95, do they take the hedge off? Because they hedge with the ES futures first. So there's so many moving parts to this. They don't hedge with the SPX options because the SPX options do not trade overnight. They're not morons. The market moves wildly overnight. So they trade with hedge with ES futures. So always find out what your BTIC is, the basis trade index close between the SPX and the ES. Today it was 35 points this morning. It changes throughout the day. I need to just double check that periodically and make sure the 35 points stays intact. And it's 33.70 right now. So if you take the 52.90 and add 33, did I say 60 or 70? 33.60. That would put us down at 53.23.6. So this has already come down a little bit. So it's now 53.23.26, but tomorrow morning, it'll be different too. So every day it changes. And so that is our hedge line. No doubt. They didn't even allow us to touch it. And so they're short underneath that. They're fully hedged, but they're short. And that means that they're going to be selling rallies. And especially with this, high volatility. So we got to see a little bit of that when the gamma flipped. And when the gamma flipped, it was on my quarterly 3. We sort of slow deathed down to this 50.80, and then it took off. So you could see that they had some support resistance there, as they did also on 50.25, and that broke and took it down to the daily RVOL 1 period. I love that they used my level. I mean, that's, very algorithmic. Very algorithmic, right? So I love it. I love it. I love it. So they're short, but the hedge line worked. The hedge line, I guess the bottom hedge line, can be adjusted on a daily basis. So even though they're short on the contract, the overall, April 18th, right now we are in a straddle between, what did I say it was? 53.23.6 and 49.42.75. Those are, so we're in a, just think of the box trading. So there's your straddle box. And when they break these lines up or down, that's when it starts moving fast again. So your downside hedge line is 49.42.75, and your upside hedge line is that 53.23.6. And anything in here, they don't care. Honestly, they don't care. They don't care if you rip it or sell it off or, slow it down or speed it up or what you do inside that area. They are fully hedged. When it goes below the 49.42.75, they're participating. They're here to make money. They're not charity, right? They're going to be selling with it to the next hedge line. And they'll do that on a daily basis. So I'm figuring all this out. It is a process of elimination. Like I said, you have to wait until you can see the market actually work inside of a situation where you know that they're hedged, and we don't get this opportunity to witness this very, very often. So I thankfully am able to try to figure it out now. Hopefully, I'm not giving you erroneous information. I do believe what I'm telling you is accurate, or I wouldn't be saying it. But yeah. So tomorrow, what we want to do is look for, support resistance below these levels. So you know now that we're at 1.5 times the monthly range, the 30-day, at this hedge line at 59.70. This is 42. It's a little bit lower than that. So it bounced up into it. But if we can stay above this 49.74, 49.72, we're inside the 1.5 times the monthly range. So we could literally um, do a zipper in here, a little zipper, and go sideways and just walk it sideways, or it can break and go long, shorter, and they make money. Um, we're below the quarterly threes, and that is sort of scary, isn't it? I think it is. Here are the tails for this quarterly three. This one up here, I can put a tail on also. 12-week. Let's just put all of them on. There we go. So now we have more structure, and we can see that this 4090, 4900 is pretty strong level. This is 1.5 times one of those ranges. And so if we break the 4900, we have 4808, and then we drop down to this 4600 level, 4563, 4517, and then way on down here. Look at this lower 39, 39.50 at our two times monthly range. So excuse me, 2 times quarterly range. These are the quarters. So it's just depending upon how much market cap they're going to sell off on these tariffs that have gotten so overblown. The messaging is so political and charged. People are not getting the right information. Number one, there's we don't need to destroy our market over this. For the cost of production of returning some manufacturing to the United States, the difference between what you would pay somebody in a factory in Bangladesh versus somebody that you're going to pay in a factory in Detroit is pretty significant. It could be anywhere from $20 to $50 an hour, right, for salary and benefits. So that is what needs to be hedged. It's like a hedge to replace the cost of capital. That can be offset with lower interest rates, and it can be offset, mitigated against with the currency devaluation. Devalue the dollar, raise the currency in the exporting country. That way, the exporting country will not absorb the hit. It will be greatly reduced, and for both parties, we'll have lower interest rates. They'll have higher currency for investments as well as spending power for them to buy the the higher priced U.S. goods. So it should offset each other. And like I said, the amount isn't that significant anyway compared to the trillion or so dollars of market cap that came out of the market, which is why I think I was having a hard time with this, wrapping my brain around why are we selling off so deep for a relatively insignificant amount. Um, and so that was perplexing to me. It just wasn't logical. And the market is not logical sometimes. So, irrational exuberance, I believe they call it. What is the reminiscence of the stock operator say? The madness of the crowds can stay mad for a long time. So, we do have this nice bullish candle, and I do think that we will see more of a rip your face off rally coming, but we certainly are in a situation where we might be lower than 23.6 through April 18th. All right. So that's NQ. But the NQ is going to trade pretty closely with it. We've got all this money coming into the country also, and all these countries that are now negotiating on an individual basis what their tariff offsets can be, and they can structure that. And it should be structured. It should be structured against their currency and the amount of tariffs that they apply to our products, as well as what type of products are they sending here. Obviously, the big concern would be not doing a zero to zero tariff with China, because then they can just flood the world with competing goods at 25% lower cost without any mitigating factors. And of course, nobody's going to buy our product versus a cheap plastic, whatever it is. Um, I know that not all of it is cheap plastic, whatever's, but there's pharmaceuticals, there's other things. We would be at an extreme disadvantage. So the playing field has to be evened. It doesn't have to be perfectly even, but it has to be so much better even than zero to zero. We have to account for that difference and the cost of production, but that's all it needs to be. And once we can, you know, put that magic formula together, country by country, I think everybody will be happy. It'll be even and more even and fair for everybody. Um, that is the goal. So if I'm not saying that correctly, let me know. If you think that I'm way out of line, let me know. I always love talking and debating these issues. I prefer talking about these ranges and learning how the market slid 300 and so points from tip to toe, eh, you know, slowly, and then sped up once we got below this um, pivot point area, just very, very fast. And how that works with how many deltas that the dealer's holding versus what the position, where the dealer position is relative to those hedged deltas and where they buy them back. I got the buy them back part down pretty cold because I think that they're trading the same model that I am on, these support resistance levels. There's, the issue of finding which level pertains to the right um, hedge. And so I'll get better at that. I should have identified, daily one levels right away. Next time I will not make that mistake. And I could have gotten that out to you earlier because we have the levels. They're sitting right here. It's just it was so far below where I thought we were going to be going that I didn't consider it, and that was my error this morning. So it is a learning process, especially when you're in this high implied volatility. We're already back up to 50 vol, and if we look at our trading tools for VIX volatility, I can tell you that 50 is the high vol. 50 is the high GEX. We're sitting on it, so we can, come back to 50 and pin it. It can be pinned certainly overnight at 50, so it can come down a little bit from its current level. And I do not see anything um, greater than 50. You know, 55 doesn't even have half the volume that 50 does. Well, just about half. Yeah. So 50 is definitely the pin at the moment, and that's subject to change, on a day-to-day basis. But yeah, knowing where the dealer positions itself with the GACs, and then let me just take a quick peek at the open interest on this. Can bring this down to a strike level. And yeah, it was showing 42.5 as the high open interest, and 50 had, um, I would say, two-thirds of the two-thirds. So we could go to 50 to 42.5. 42.5 has the high open interest. So in the overnight session, let me remind you, the Federal Reserve New York, um, Federal Reserve has a fantastic white paper. It's called the Overnight Drift. And I highly recommend that you read it. It's a quick read and you'll get it right away. But it basically, in a nutshell, oops, Overnight Drift, there it is, available in PDF. And they basically say that the market is statistically based and highly statistically based in the Globex session, and especially during the London Open. And the dealer will lay off the extra risk that they picked up in the, I call it risk, the extra, position that it picked up. Usually they're going long in the overnight session. So this is going to be, presents an interesting theoretical position already. If they're usually always long, right, and they're hedged and now they're short, will there be an overnight drift? So I'm not, we may not even get an overnight drift in the London session. So I will post my Globex levels for you um, on the market open when we get to 1600. I'll go ahead and send those out to you tonight so that we can see where those opens are. And because they really, really, really also love these Globex ones on the open and close. And that's something else that you need to be aware of. You have an open at 1700 and then you have a close at 830. Both distributions, they're separate. Combined together create the Globex chart. And you can't get a breakout trade until you break this Globex 3 up or down. But and depending upon the timing of that break can really lead to a significant market event as far as a big trend day. But that here, like right here, that Globex 3 got breached right here and it took off. Otherwise, it's fantastic support resistance. Um, Here it gapped down. That was a Sunday. But you'll enjoy putting the Globex on your screen and seeing how the market trades to these levels. Okay, I'll get that out to you. That'll help you with your London session trading. That's when the overnight drift really picked up. But that is an interesting issue, isn't it? We're no longer, dealer normally is always, long, and now not long at all. They are positioned short under 5,300, 53.23 to be exact, point 0.6. And that's going to change tomorrow. Don't forget the BTIC between the SPX and the ES will determine what that level is. So what you should do is take the 5290 and then add whatever the BTIC is that you get uh, tomorrow to that before the market opens, and that will be the new upper headline for ES. And again, it's through April 18th until um, that closes the OPEX. And the OPEX is an evening close. The only daytime um, morning um, options are the VIX and the quarterly. The VIXpiration is in the morning, but the OPEX is in the afternoon. It's a confusing, yeah. All right, so but we really did well this morning. We identified this daily one at 37.15, and then I had no idea it was going to go up to 57 today. I mean, I'm just sort of stunned, still stunned that they broke the quarterly 3, to tell you the truth. Still stunned because we had that close on top of it. But, all right, so next time it gets near the hedge line, it's like, are they going to hedge the hedge if it goes back in, or do they just let the position go and become, uh, you know, break even neutral? Um, so with the amount of position size that they're carrying on these trades, um, I guess that had a lot to do with it also. They kept us away from it. We couldn't even touch it. And it got up to 53. It got up to the quarterly 3. They wouldn't let us up to touch the headline. So they're short. That means they're short until the end of April, unless that changes. Unless, like I said, Chi decides, that he's going to give us everything we want and comes over here and starts strumming a guitar chord or two with the Donald, then otherwise they're going to be short. Okay. Figuring it out one day at a time. We appreciate you, and I'll see you tomorrow. Thank you so much. Let me know if you have any questions.